Hey everyone, I'm Molly from AIA Investment Management. Over the next few minutes, I will walk you through key global market developments and share some timely investment insights to help you navigate today's complex landscape. Let's start with Middle East tension. On June 13, Israel launched a surprise strike on Iranian's military and nuclear facility. Iran responded with missiles and drone attack, escalating tensions sharply. Just this past Sunday, the U.S. entered the conflict, targeting Iranian nuclear sites, marking a significant shift in involvement. Iran then retaliated by firing missiles at a U.S. base in Qatar on Monday. This investment has heightened concerns over oil supply, pushing oil supplies higher. A ceasefire was later announced by U.S. President Donald Trump, with hopes it will hold. Iran's state media confirms the ceasefire, though its foreign minister noticed no formal agreement was in place. Despite the geopolitical volatility, global equity markets have shown cautious resilience. U.S. equity even edged higher last week, reflecting selective investor confidence in domestic fundamentals. Historically, geopolitical shocks tend to cause short-term market pullbacks, often driven by oil price spikes, but these typically reverse as fundamentals reassert themselves, creating potential buying opportunity. Now, turning to U.S. economy, recent data points turns to be a cooling trend. Retail sales fell nearly 1%, suggesting softer consumer demand, likely impacted by tariffs. Inflation, as mirrored by CPI, rose just 0.1% month on month, still not fully reflecting tariff effects. In response, the Federal Reserve held rates steady at 4.25% to 4.5%, signaling a wait-and-see stance. Markets are increasingly pricing in a potential Fed pivot later this year, depending on how inflation and labor data evolve. So what does this mean for investors? While short-term market return can be highly volatile month to month, reacting to headline and economic noises as shown in the darker line in the charts. But long-term investing is about staying the course. Zooming out from daily or monthly fluctuation help investors focus on what truly drives wealth creation. It's about consistent exposure to quality assets and the discipline to ride out volatility. For example, Buystein invested a 10,000 investment in the S&P 500 in 2015 would have tripled by 2024, despite COVID-19, inflation shocks, and recent geopolitical tensions. Time in the market beats timing in the market. And how does AI stewardship support our clients through this? In today's uncertain environment, clients need more than just the products. They need guidance. With rising geopolitical risks, inflation uncertainty, and market swings, it's easy to feel overwhelmed. That's where AIA stewardship comes in. We help clients build resilient, diversified portfolio using both in-house and external expertise. We monitor portfolios professionally to help clients stay disciplined and avoid emotional missteps like panic selling or sitting on the sidelines. By keeping clients informed and invested through market cycles, we aim to capture full cycle returns and support their long-term financial goals, even when the headline feels unsettling. Thanks for listening today. See you next time.